I'm about to share with you guys 10 things I've learned from 4 years of trading. Let's get straight into it. Welcome back to the channel, welcome back to another video. So I'm just going to be sharing a little bit about myself before I go into those 10 things. My name is Harrison. I've been trading Forex for 4 years. My first job was in Marks and Spencer's. I moved on to do accounting, but accounting was dead ass boring. It was literally boring. It was the same thing over and over and over again. So I did that for maybe I think about 2 years, or roughly about 2 to 3 years, but I worked in finance for about 6 years. But then I eventually moved on to Forex trading. And when it came to Forex trading, I didn't just leave my job straight away. I made sure I was making more money Forex trading than I was in my accounting job, and I was doing that on a daily basis. And then eventually I just said, you know what, screw this, I'm done with this accounting stuff. I can't be walking around this place looking at screens for the rest of my entire life. Even though I look at screens now, but it's a different kind of vibe, and I didn't really see myself going anywhere. So I decided to take the leap of faith. But by God's grace, I've been able to grow and make more money than I did doing accounting. I didn't come from a rich family. I didn't come from any of that stuff. There was no silver spoon. There was no hand-me-downs. There was nothing. For you guys out there, you don't have no silver spoon, there's no hand-me-downs, and all you're trying to do is be better in your life and hit your goals and hit your dreams and stuff like that. Grow a family, become a husband, be the best man to your wife and your children that you could ever be, then this channel is for you. I'm telling you now, because this is my background, this is where I come from. If you're about that smart money institutional life, this is the right channel for you guys, man. Without me just waffling on, because I could talk for quite some time, I'm gonna go straight into the 10 things that I've learned over 4 years of trading. So, number one, you guys hear me say this all the time. But I have to make this my number one, because it's when I made this my number one thing, everything changed for me. This is when things really start to work. By the way, these aren't in any kind of particular order, but this very one is probably one of the most important ones for me, and it's always trade towards the money. You guys hear me say it all the time. You hear me say it in nearly all of my videos, trade towards the money. Because it was not until when I started trading towards the money, I started winning a lot more of my trades, and the return started becoming a lot bigger as well. If the institutions are always trading towards the money, and when I say the money, I just mean liquidity. If they're always trading towards the money, then why not just get in line with them, trade in that same direction, and win more of your trades? So this is why I've done a whole liquidity series. Check out the liquidity series after this video. I'm actually going to link a playlist right here. Click on that I button after this video, because I'm telling you now, when I started trading towards the money, everything changed. Number two is risk management. And I know you guys hear this all the time, you know, risk management this, risk management that. But guys, I'm telling you now, risk management is really, really important. It's probably number one. So risk management is vitally important, and I can't stress it so much, because what I used to do back in the day was I used to just over leverage and risk the most. I would have like a small account, and I'll be doing big lots on a small account. My account wasn't able to handle the lot sizes that I was trading, and these times I didn't even know about risk management. I was just making money, man, and you know, making money quick then losing it all. Yeah, I was trading big lot sizes on a small account, and it just wasn't doing it. It would take 3 trades to blow my whole account. And so this is why risk management is so important. You see people risking 5%, you see people risking 3% per trade. To me, that's just absolutely bizarre. That's what I used to do, that's why I'm saying it's bizarre. But now, look, I risk 1% per trade. Why? Because the way I trade enables me to catch a higher percentage return. So I don't need to be risking 3% per trade. I don't need to be risking 5% per trade. I risk 1% per trade, and that's what I encourage all my mentees to do also. Think about it like this. It will take you 100 trades to blow your account if you risk 1%. But if you're risking 5%, we are talking about 20 trades and your account is gone. Just let you guys know, this is just stuff that I've done in my life, and it's helped me in my Forex trading. The third thing that I'm going to talk about is waiting for the trade to come to you. And what I'm trying to say is entering the trade at the price that you want to enter in. Too many times I experienced FOMO, and then I was forced to enter in at the broker's price, which is never ever the best price. You always want to wait for price to come to you when it comes to trading, and then you take price in your intended direction. So always wait for price to come to you, because if not, if you enter at the broker's price, it's never a good price at all. The fourth thing I've learned from 4 years of trading is you take partials, or you close your trade at liquidity. So if you've identified some kind of liquidity at a specific point, then you want to be taking some kind of partial profits. You want to be taking some kind of profits off the table, because that is the way you compound your account. I always tell my mentees every single time, take partials at high probability areas and then let your runners do the hard work. Let your runners do the legwork. A lot of the times when you see me swing trading and the position's gone a few hundred pips, normally that position is a partial position. I focus on the high risk to reward intraday setups, and then from time to time I go for a high return swing trade. Another reason you take partials or close off your trade at liquidity is because some of the time when price runs liquidity, price could often reverse. So you want to get out or take off most of your position off just before price reverses. The fifth thing I've learned from 4 years of trading is that it's not about always catching the highs and the lows of the market. Guys, you're going to do yourself dirty, always trying to catch the highs and always trying to catch the lows. You don't want to be about that life. You want to give yourself maybe a number of attempts, maybe 1 or 2 attempts, and then you wait for price to reverse. Yes, there is a skill of being able to catch price from the high or the low. I catch price from the high or the low some of the times as well, but not all the time. Sometimes you get stopped out trying to catch the high or the low. I always tell my mentees, give yourself maybe 1 or 2 attempts to catch the high or the low, and if that flops, then wait for it to get that reversal sign and things that they can look for to then take price. Bullish if it's a bullish environment, or bearish if it's a bearish environment. And the reason I'm saying all of this is because back in the day, what I used to do, I used to always try to jump in from the lows, or from the highs to the highs all the time. And guess what? I would end up blowing my account because I'm always trying to catch the low. You know, I remember one time I was trading US 30, trying to catch the very high, and every single time that bad boy did not reverse. It ran a high, I jumped in, it ran a high, I jumped in, it ran a high, it jumped in, I got stopped out every single time, and then I gave up, and guess what? It dropped. And so guys, it's not always about trying to catch the high or the low. You will end up blowing your account like that. So you want to wait for price to respond from your area. You want to wait for the more established move as well. Those are the much more higher probability trades. Alright, so we're moving on to number 6 now. So guys, if you're loving this so far, if you're vibing with this, make sure you hit that subscribe button. I don't know whether it's there or here. Hit that subscribe button, join the liquidity gang. The liquidity gang are a different kind of breed. We trade towards the money. So get that in your heads, guys. Liquidity gang, we trade towards the money. It's as simple as that. Number 6 is you don't need to be trading on every single kind of currency pairs. I have maybe 2 to 3 main currency pairs, and I dabble in another. I just focus on GBP USD, Euro USD, gold, and I dabble in US 30 and oil. So that for me is what I can handle, is what I'm comfortable with, what I used to do back in the day when I was doing a lot of retail trading. So I was dabbling in 30 different pairs. I don't know how I managed to even focus. I was marking up charts every single night, all 30 of them. Every single day I would look at those charts, and I don't know how I managed it back then, but it was just crazy. It was absolutely crazy. I'll be in so many different trades at the same time. Risk management all out the window. It gets confusing. It's too much to handle. How about you focus on maybe 2 pairs and you catch more of those moves on those pairs instead of missing trades because you're trying to catch all 30 different pairs and 30 different trades. Look guys, you don't need to be getting stressed. You don't need to be adding any more stress to your life. So scrap that, throw that out the window, chuck it out, and focus on just a handful of pairs. Number 7. So when I'm saying all of this, just not like your normal kind of things that people learn from. I'm trying to incorporate the way I think about these markets and everything else into these things that I'm relaying to you guys right now. Number 7, always think about the opinion that's being created in the market. I know no one's going to tell you this. No one is going to tell you this. And this is why this channel is the place to be. Liquidity gang, you know where you need to be. Turn on notifications. This one right here, always think about the opinions in the market. This one is so important. Why? Because there's always an opinion trying to be created in the markets. You need to know what kind of opinion they're trying to create for retail traders to believe in and trade. Most of the time it's going to end up going the other way. So it might go in their favor for a little bit and then it will just reverse. So always think about the opinion that's being built up in the markets. People ask me, yo H, what's your strategy? And all I say to them, look, I don't have a strategy. I'm also thinking about the opinions in the market and I trade according to that. That's what I do. There is no, if it does this and does that and follows this pattern and whatnot, then this must be, no. I don't trade no patterns. I don't trade no patterns. Number 8, this one's pretty cliche, but we're gonna say it anyway. Number 8 is follow your trading plan. So first of all, if you don't have a trading plan, you're absolutely playing yourself. You're just YOLO trading. That's what I call YOLO trading. You don't know what's going on. You don't know what your percentage goal is. You don't know when you should stop. You don't know how many trades you should be trading. You don't know the currency pairs you should be trading. You don't know the time you should be trading. You don't know a thing. You're just YOLO trading. You don't know what you're doing. You're just gambling. It's just gambling, okay? You don't know what you're doing. And so it's always important to have a trading plan first of all. And guess what? What's even harder is sticking to that trading plan. Folks, you need to be disciplined. You need to come back every single day that your trading plan says you can trade and consistently position yourself in the right place. The reason I say that is because it's not every single day you're going to win. You're not going to win every single day. You're not going to win every single day. So this is why I said consistency with your trading plan and discipline. When you position yourself correctly on the days that you trade, you're going to win more of your trades. Just because you lost today based off of that doesn't mean tomorrow you're going to switch it up and then try to catch something else. No, position yourself correctly again and be consistent with your trading plan. So you're gonna know the times that you're trading, the currency pairs. You're waiting for certain opinions to be built up in the market and so on and so forth. Then you find an entry, then you jump into that trade and be consistent with that. Don't be trying to switch up all the time. If you know that you flop in New York, why are you trading in New York? If you know that your trade's bang in London, keep it to London. And so position yourself correctly in these markets and do it on a consistent basis and watch yourself compound your account. That was kind of like number 9 as well. And number 9 was about your strategy and just being consistent with your strategy. So I'm going to kind of intertwine those two, number 8 and number 9 together. So number 8 was consistent with your plan. Number 9 is sticking to your strategy. Just because your strategy didn't work yesterday doesn't mean you have to switch up today. All right, and now we move on to the final thing that I've learned in trading. And you know, there is many more things, but you know, these are just the 10 things that I wanted to share with you guys. If you find yourself on a consistent losing streak, step back and do something else. Take your mind off of trading. You don't have to necessarily go straight back into the markets and start looking at why you lost. And just take your time out to say maybe your strategy never worked for that week, or maybe it was that month you just had a bad month. Take some time off, do something different. Take your mind off of trading for a little bit, then come back refreshed, revitalized, with high energy. Because what would normally happen is on a losing streak, your emotions start going all out the window, all psychology is gone, and then you just continue to lose because now you're being forced to enter the market at the broker's price. So you have FOMO, all kinds of stuff are happening to you. And so you need to take a step back, do something else, play some football, eat some food, spend some time with the family, go out with your friends, do something else that takes your mind off of trading. Don't even look at the screen. Take your time off, take some time away, then come back fresh. Positive energy, positive vibes, and then go and attack the markets again. I've had losing streaks before. I don't win every single trade, but I know that when I do have a losing streak, I take some time off. So liquidity gang, those are the 10 things I've learned from 4 years of trading. Hopefully you guys can take some of that on, apply it to your life, apply it to your trading, and see how that switches things up. Like I said, I've dropped a liquidity series right here, guys. I'm telling you now, you need to watch this series. If you're part of the liquidity gang and you haven't watched this video, you're absolutely playing yourself. So you need to watch this video right now. Anyway, guys, have a blessed day. Peace.